Welcome to the channel. Today we ask, how did Colombia, once a Latin American economic star, find itself in turbulent waters? The country's growth has slowed dramatically, testing the resilience of its people and institutions. After a rapid post-pandemic recovery, momentum has faded. GDP growth now barely keeps up with population increases. For Colombians, this means fewer jobs, tighter budgets, and growing uncertainty. High interest rates, political uncertainty, and shifting global demand for exports like oil and coffee have all contributed to the slowdown. President Gustavo Petro's ambitious reforms face tough headwinds in this climate. We'll break down the key indicators, unemployment, inflation, public debt, and see which sectors are struggling or adapting. We'll also explore how Colombia's central bank and government are responding, and how global forces shape their choices. Our goal to connect the dots and explain what's happening, why it matters, and what Colombia's path to renewed growth could look like. Let's dive in. Colombia faces 5 major economic headwinds. First, sluggish GDP growth forecasts for 2025 are just 1.5 to 2%, far below what's needed to reduce poverty. Second, persistent unemployment, especially among women and youth, remains in the double digits. Third, high interest rates raised to fight inflation have made borrowing expensive, stifling investment and consumption. Fourth, inflation itself, while moderating, it's still above target, eroding purchasing power and hitting the poorest hardest. Finally, public debt pandemic spending pushed debt levels up, limiting the government's ability to respond to new crises. Each of these challenges is interconnected, making policy decisions more complex. The central bank must balance lowering rates to spur growth without reigniting inflation. The government faces tough choices: fund social programs or maintain fiscal discipline to reassure investors. Managing these pressures will define Colombia's economic trajectory in the years ahead. The stakes are high for both citizens and international investors. Understanding these headwinds is key to grasping Colombia's current predicament. Let's look closer at how these challenges play out across different sectors. Colombia's slowdown isn't uniform. Some sectors are hit harder than others. Private consumption, once a growth engine, has stalled as inflation and high interest rates squeeze household budgets. Investment, both public and private, has contracted, especially in construction and manufacturing, as uncertainty and borrowing costs rise. The export sector remains reliant on volatile commodities like oil and coal, leaving the economy exposed to global price swings. Non-traditional exports, agriculture, flowers, and services show resilience, but diversification is slow. Service sectors like finance and IT are growing thanks to digitalization, but can't offset job losses in labor-intensive industries. The result, a patchwork economy with pockets of strength unable to compensate for widespread weakness. Long-term competitiveness is at risk without renewed investment and export diversification. The government's challenge is to support struggling sectors while nurturing those with growth potential. Let's examine the forces shaping these trends. Colombia's economy is shaped by both domestic policy and powerful global forces. The central bank's priority has been fighting inflation with high interest rates, but this has slowed growth. The big question for 2025, how quickly can rates be cut without letting inflation surge again? Meanwhile, President Petro's government is pushing social investment and energy transition, but lower growth means less tax revenue and tighter budgets. Balancing reform ambitions with fiscal discipline is a constant struggle. Externally, slower growth in the US and China reduces demand for Colombian exports. US Federal Reserve rate hikes strengthen the dollar, making Colombia's debt more expensive and driving capital outflows. Commodity prices, especially oil and coal, remain volatile, creating budget uncertainty. Colombia's dependence on commodities is a long-standing vulnerability. The government aims to diversify, but progress is slow. Global market shifts and policy decisions in Washington have direct impacts on Colombia's economy. The interplay of these forces will determine how quickly Colombia can recover. Policymakers must remain agile, balancing domestic needs with external realities. The stakes: economic stability, investor confidence, and the livelihoods of millions. Now let's see how these dynamics affect everyday Colombians. The slowdown's human cost is most visible in the labor market. Unemployment remains high, but many more work informally, without contracts or protections. Economic downturns push more people into informal jobs, lowering wages and increasing vulnerability. Young people and women are hit hardest, risking a lost generation and widening gender gaps. Inflation strains household budgets, forcing families to cut back or take on debt. Social programs help, but they're costly at a time of tight government finances. The challenge: protect the most vulnerable while keeping public finances sustainable. The social fabric is under strain, making effective policy more urgent than ever. How can Colombia reignite growth? First, restore investor confidence with stable rules and clear policies. Uncertainty is as damaging as high rates. Attract investment in job-creating sectors like infrastructure and manufacturing. Accelerate economic diversification. Move beyond oil and coal by supporting agriculture, ecotourism, tech, and creative industries. Invest in infrastructure to cut business costs and boost competitiveness. Major projects create jobs now and lay the groundwork for future growth. Invest in people, reform labor markets to reduce informality and align education with modern job needs. Strengthen vocational training and lifelong learning to help workers adapt. These steps require political will and targeted policies. The payoff: a more resilient, inclusive, and dynamic economy. The path forward is challenging, but the tools for recovery are within reach. Colombia stands at a pivotal moment. The economy faces weak growth, high unemployment, and lingering inflation, with policy responses complicated by global uncertainty. Yet Colombia's strengths, resilient institutions, a diverse economy, and entrepreneurial people offer hope. The current slowdown is an adjustment, not a collapse. Recovery depends on tough choices: boosting investment, diversifying exports, and investing in infrastructure and human capital. For investors, the era of easy growth is over. Opportunities now require careful analysis and sector-specific strategies. Sectors like tech, services, renewable energy, and sustainable agriculture may offer the best prospects. Thorough due diligence and close attention to policy shifts are essential. The central bank's rate decisions will be a key signal for recovery. Colombia's long-term potential remains strong, but patience and strategic insight are needed. The coming months will shape the country's economic story for years to come. Stay tuned as Colombia navigates this critical crossroads. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.